Welcome to Buy, Hold, Sell, brought to you by Livewire Markets. Today we're talking about the coronavirus, its infection on markets and if it's providing a short-term buying opportunity. My name is Jessica Amir. I'm from Bell Direct, proudly with Roger Montgomery from Montgomery Investment Management and James Gerrish from Shaw and Partners. Roger, let's start with you. Coronavirus, since the outbreak, we've seen the resources, energy and staple sectors take a hit. What does the outbreak mean for investors? Is it a buying opportunity?
Well, it really does depend on the sector. If you take banks, for example, they probably benefit from their defensive status in this kind of situation. If China slows down a lot, you could see pressure on the Australian dollar. So people might look to banks for the defensive and healthcare as well. If you look at travel, Qantas, probably no impact really because only 2% of their scheduled international flights for this year are from China, so not a big deal. But on the other hand, Sydney Airport's, a really big impact potentially because 10% of their traffic and their arrivals are from China, and Chinese visitors spend a lot more at the high-end shops at the international terminal. So it really depends on the sector, it depends on the stock. Retail, probably not a big impact generally, unless you're a high turnover retailer, and if you've got disruption to your supply chain and you can't get stock, well, you can't sell stock. So companies like Livewire, for example, they may have some issues if this shutdown in China continues for an extended period of time.
Great. James, what do you reckon?
Yeah, I think on the bigger picture standpoint, so you think about what's been driving markets over the last year or so is low interest rates, liquidity from central banks, etc. So, a shock to global growth that only intensifies that. The support from liquidity, the support from central banks, the outlook for interest rates being lower for longer, etc. So, from a macro standpoint, I know global growth has taken a hit, but there is an offset in terms of central bank intervention and then potential for further government stimulus. So I don't think it's the major issue that has been perhaps foreshadowed by the market.
Nice. And generally speaking, the healthcare and the IT sectors have been injecting the most love and life into markets. What do you think about this?
Yeah, I mean, if you think about IT and health, they've been the most loved sectors over the last couple of years. One of the major tailwinds for sectors like that is low interest rates that I was just suggesting. So lower interest rates are going to be supportive of healthcare and IT. I mean, these are broad sectors, so some areas of the healthcare space will benefit, some won't. We saw Cochlear come out with a hit to earnings on the back of this, so there'll be short-term pockets of pain in some areas, but overall, these areas have been stronger for longer, and low interest rates are only going to be supportive of that.
Short-term pockets of pain, short-term massive gainers, Afterpay and CSL also all-time highs. Generally speaking, IT, health, what do you reckon?
Well, I agree with James. It depends on the individual company, how they're impacted. CSL is a position in our domestic portfolios and we're delighted with how it's performing, obviously. It's really important to understand, though, that interest rates are the big story and they're ultimately supportive for asset values and asset prices. The other thing that you've got to realise, though, is that prices are so extended now. We've got, for the ASX 200 industrials, excluding financials, it's on about 28 or 29 times. The S&P 500, the Cape-Shiller ratio is now on 32. It's only been higher once since 1870. So it really does put a lot of pressure on earnings to support those high valuations. If coronavirus or any other Black Swan event hits those earnings, you'll see very, very rapid declines in share prices. So you do have to navigate it carefully.
Mm-hmm. And speaking about those Black Swan events, such as what we've got now, the coronavirus, how do you guys manage these events? I mean, you're a fund manager.
Yeah, look, I don't think you can. I don't think, if you were worried about Black Swan events all the time, you probably wouldn't invest. You're investing for the long term. People ask me about the federal budget every year and my comment is always, well, there'll be another one next year. They ask about the election, there'll be another one in 3 years. We get these potential pandemics that come and go and they present opportunities. In the words of the famous Greek philosophers, this too will pass.
Love it. What are your thoughts?
Yeah, I tend to agree with Roger. If you did, a Black Swan event is an unpredictable event that comes along. If you're worried about those, you wouldn't put a dollar in the market. In terms of portfolio positioning, position sizing is important. So understanding, not having too much exposure to particular areas. So understanding the drivers of a particular stock and understanding the drivers from a portfolio context, I think is important. But overall, you can't, if you're worried about that, you wouldn't invest. History has suggested that if you just keep investing on a consistent basis, that's what generates strong returns over time.
There you have it. Market sentiment may have been infected by the coronavirus, but the cure is sticking to your long-term strategy.